Welcome to the Higgins Team Facebook page. We are live, and it's been a little while since we've been to you. I know Brell and I used to hitch up every month with the market stats, and then the pandemic happened, and everything went crazy. So obviously, the market has bounced back from the pandemic in a big way, and we can certainly talk about that. We are now approaching October, and we would generally see a slowdown in the market this time of year. And curious what your thoughts are on the real estate market right now, but it's definitely feels like it is slowing down, but in a seasonal way. I'm not comfortable with saying that there's going to be an overall change in the market, but I keep telling people that um, I've been doing this 15 years now, and I'm more uncertain about the future of the real estate market today than I've ever been in my real estate career. And people will say, "Oh, how do you know? I mean, how can you possibly say that? I mean, we were in a horrible market." So don't misinterpret what I'm saying. I'm not saying that I think that the market is going to crash and we're going to go back into the 2008, 9, 10 era. I'm not saying that at all. I'm just saying that in 2008 and 9, had you asked me what the real estate market was like, I was pretty clear on what the real estate market was like. If you asked me in 2009 if you should sell your house, I would have said absolutely, because in 2010 it's going to be worth less. Um, and I sit here today, and I can't really say that. I don't know if anybody can. I don't know what next year is going to bring. It feels like we've been in an expansion, appreciating market for a very long time, and then the pandemic came along. You thought that would have been enough to kind of, take the air out of the sails, and it did for about 6 weeks, and then all of a sudden it just bounced back. Clearly, there were some things that happened with the stimulus packages and the PPP and all that kind of stuff, but the interest rates probably played the greatest role in helping support the housing market, and I don't see those going away anytime soon. I think that those are sticking around for a while. Um, so curious if you guys have any questions, what your thoughts are on it. I know that I'm kind of the real estate geek. You guys probably don't think about real estate day in and day out, but if you are, considering whether or not you should buy a home or whether or not you should sell your home, then I'm kind of curious what your thoughts are, what your fears are, or anything like that. Um, so I'm kind of at a place now where I feel like we've been in an expansion for a long time. So if we look statistically at things and the fact that real estate markets have cycles, um, I would say that we're probably closer to the next downturn than we are from the last downturn, if that makes sense. Again, not saying that the downturn is going to happen this year, next year, whatnot. But there's a lot of things going on. So and we've been in it for a long time, so I feel like we're probably there. Um, does that mean that you shouldn't buy a home? I'm not comfortable saying that either. I think if we look at the statistics, I think 6 out of the last 9 economic depressions or recessions, we've actually seen housing prices go up. So even if we feel like we're going into a housing recession, that doesn't necessarily mean that your housing is going to crash. In 2 of those 9, I think it went down like 1% to 4 or 5%, nothing significant. And then obviously the last downturn is the one that we remember the most, where it crashed a significant amount. So when we look at history, even if there is some sort of pullback in the housing prices or the housing market, it doesn't necessarily mean that it's going to be significant. And so my stance on the whole thing is, if you can grab these 2.75% interest rates that are floating out there, some are less depending on the loan programs you go with, but that is like insanely low. I don't think they've ever been that low, ever, and I feel like we've said that a lot. But I mean, at some point we've got to like realize that we are kind of at the bottom of interest rate levels, and it has made housing much more affordable. So I kind of feel like I would rather go for a lower interest rate and take the risk of maybe the value of my home being a little less next year or 2 or 3 years from now. If you guys are intending on being in the market, or in your house for 7, 10, 15 years, then like it's total no-brainer. Go for the super low interest rate. And if you wake up 2 years from now and your house is worth $10,000 less than it is today, ouch. But think about the amount of money that you've saved by taking that interest rate. So that's kind of my feeling on it. As far as selling goes, I don't know if you're, some people will fight harder to earn $20 than they will not to lose $20. So you kind of have to feel where you are in that. Are you more risk averse? Are you the type of person that really does not want to lose any money? Or are you one of those people that likes to, shoot for the stars and try to get everything you can out of a house? So um, I would say that if you're risk adverse, yeah, I think maybe you should consider. I don't know. Um, Regardless, I think one of the things that people do not do enough is to monitor the value of housing when you own a house. Your stock portfolio, they usually send you something monthly or at least quarterly, letting you know what your stock portfolio values are, whether they've gone up, whether they've gone down, that kind of stuff. I think you should be doing the same thing with real estate. The nice thing about real estate is we generally don't wake up one morning and find out that we just lost 10% in value. I mean, that's pretty extreme, and we don't typically see that. We tend to see things move in a slower fashion. So um, if you're watching it and you're getting a valuation on your home every month, and you see that we've had 3 or 4 months of a steady decline, then maybe you jump in and say, okay, it's time to sell. That kind of stuff. Depending on your area, you may choose to try to play the market timing. If you're in Davis, for instance, very, very cyclical market, heavily influenced by the schools for our little chitlins, as well as the university level schooling, has a big impact on our real estate market and the prices. So the pandemic has kind of thrown a little bit of a weirdness into it. I'm going to see if I can um, share my screen right now. I guess it's not going to let me share my screen, so I don't know how to do that. But anyway, yeah, it's the market's pretty cyclical. I would say that in January we start to receive some of those phone calls from people. Hey, I'm thinking about buying, thinking about selling. What do I need to do? By February, we start seeing some buyers entering the market. The inventory for the sellers is still a little bit slow. By March, we start seeing more homes come on the market. The frenzy then begins. By the time we get into April and May, it's just insane. Real estate agents in our area are probably working 16 hours a day, 7 days a week to try to keep up. It's super crazy. I would say that many agents do about 70% of their entire year's worth of business between the months of April and July, and that's why you probably don't see your real estate agents too much from a social standpoint during those times. And then interesting, but 4th of July is kind of the cutoff for the hot season, in my opinion. I don't know if I've ever done any like hardcore statistical analysis of that particular day, but I would say that I've been doing this for 15 years and it certainly feels that way. I think if you were to ask other real estate agents in the area, we all kind of agree that 4th of July is kind of the cutoff. Pre-pandemic, when we had open houses, we would have 30, 40, 50, sometimes 100 people through open houses on a weekend. Come 4th of July, all of a sudden it drops down to like 5 or 10. As a result of the lower demand, then we start to see a cooling of the prices and oftentimes a little bit of a seasonal depreciation in the prices. And by October, November, December, it's super slow and prices are kind of hitting kind of their bottom point for the year. And then we start the cycle over again. So yeah, we can see swings as much as 10% between like a February and an August time frame. So August, July, and August tend to be kind of the peak of the pricing, which makes sense. If the activity stops in July, then anything that's closing, within 30 days of that time frame is usually kind of where the peak is. So, and if I were able to share my screen with you, I would show you that Davis has a very consistent graph that does that. So this year, because of the pandemic, it feels like everything got a little bit out of whack. School is still remote in our area, so there wasn't necessarily this rush to get into a place before the school year. And then we've had the whole aspect of that it seems like the client has changed a little bit. Like we're definitely seeing a lot more Bay Area influence. People coming from the Bay Area, their jobs have gone remote and indefinitely in many cases, and so they're like, we're going to get out of this super expensive Bay Area lifestyle. We're going to move to a community that has great schools and the housing is less expensive. And so we've had that influence of like families moving here with school-age children and just getting out of the Bay Area. But then we've seen kind of at least I have personally, and I can't speak for everybody, but I feel like the university influence has kind of waned a little bit. So we're not serving quite as many professors and that kind of stuff, or parents who are choosing to purchase homes for their students who are going to, be going to school here for 4 years. I haven't seen so many of those. So the high end did really well. Those were all the Bay Area people coming in here and snatching up the 800, 900 million twos, whatever. But it feels like some of the kind of the investor areas, those may have slowed a little bit. So just my personal feeling. But anyway, I'd love to be able to chat with you guys more often, do some Facebook Lives, hang out a little bit. Let me know what kind of things you want to talk about. You know, curious if how I come about valuing a market or anything like that, or a house. Let me know. Happy to help you with that. You can just shoot me an email. The email is actually right there. You can see it. Jeremy at Higgins Home Search, right there. Jeremy at HigginsHomeSearch.com. And then, of course, that's I can't do this. My phone number is right there. Boom. 530-738-1269. So give me a call, and we can chat about your house. We can chat about whether or not you're thinking about buying. One last little interesting thing. So the market inventory. This is one of the things that economists and real estate agents use to judge the availability of housing. So they call it months of inventory. And the easiest way I can describe that is if we didn't list a single house moving forward, at the rate that we're selling homes today, Davis would run out of homes to sell in less than 1 month. It'd be 7/10 of 1 month. I've been doing this 15 years. I don't recall it ever being that low. I mean, it probably has, but in my 15 years, I can't recall. Like that is super duper low. Many economists will say that 6 months worth of inventory is considered a balanced market, meaning it doesn't favor a seller, it doesn't favor a buyer, it's just balanced. Anything less than 6 months tends to favor a seller, according to these economists. I don't know if I agree with that 6 month thing, at least in our area, but nonetheless, 7/10 of 1 month, or 7/10 of a market is 7/10 of a month's worth of inventory is legit low. All right, like super low. But here's the crazy thing. The average days on market as of just like 2 days ago that I could tell was like 54 days on the market. That's the third highest. August was the third highest days on market for the entire year. And I think it was competing with like pure pandemic, like beginning of the pandemic, which wouldn't have been a surprise. So this weird dichotomy here, like how do we have higher days on market but we have no inventories? Like something's going on. That's one of those things that's kind of playing into that Like the future of the housing market is more unpredictable to me today than it ever has been before. Again, I'm not saying that's good or bad. I'm just like, when you call me and say, hey, what's going to happen with the market? It's pretty difficult for me to say. I don't know. Um, I wish I did know, and I promise you I would tell you if I did. But anyway, let's chat through it. I would say that buyers tend to they're being a little more sketchy today. We're seeing more cancellations across the MLS than we normally do. That cold feet type of thing is happening a little bit more. So yeah, weird stuff. But um, anyway, give me a call. Let's chat. Take care.